Today's biggest financial stories markets are shifting fast. AI rally, Bitcoin surge, and Fed signals explained. Today's markets sent a powerful message. AI optimism is driving tech higher. Bitcoin is surging again. Oil prices are climbing, and investors are now watching the Federal Reserve more closely than ever. Here's what you need to know in under 5 minutes. 1. The Fed and interest rate investors are increasingly focused on whether the US Federal Reserve may eventually move toward interest rate cuts as growth concerns and inflation pressures collide. Markets remain divided, with some Wall Street firms pushing rate cut expectations further into late 2026 because inflation remains stubbornly high, especially due to rising energy prices. The key takeaway: the era of ultra cheap money may not return quickly, and that matters for stocks, bonds, housing, and global investment flows. 2. AI optimism fuels tech rally. Artificial intelligence continues to dominate financial markets. Tech and semiconductor stocks rallied again as investors poured money into companies benefiting from the global AI infrastructure boom. Nvidia earnings are now one of the most anticipated events on Wall Street, with traders expecting massive volatility. Analysts believe AI investment could reshape the global economy over the next decade, potentially driving trillions in capital spending. This is no longer just a tech trend. AI is becoming an economic infrastructure story. 3. Bitcoin pushes higher again. Bitcoin continues to attract attention as institutional interest in crypto grows. Markets are seeing renewed bullish momentum around digital assets, with investors watching ETF flows, regulation, and macroeconomic uncertainty very closely. Some analysts believe Bitcoin could enter another major expansion phase if institutional adoption accelerates further. At the same time, volatility remains extremely high, especially as global markets react to inflation, rates, and geopolitical tensions. 4. Apple beats expectations. Apple delivered stronger than expected earnings, reinforcing investor confidence in mega-cap technology companies. The broader message from markets is clear. Investors are still rewarding companies with strong cash flow, pricing power, and AI-related growth potential. Big tech continues to dominate market performance in 2026. 5. Oil prices surge. Oil prices moved sharply higher amid supply concerns and geopolitical tensions. Rising oil prices are now becoming one of the biggest inflation risks facing the global economy. Higher energy prices affect everything: transport, food costs, manufacturing, and consumer spending. This creates a difficult balancing act for central banks: support economic growth while also controlling inflation. Closing, the big picture today is this: AI is driving massive optimism. Bitcoin is regaining momentum. Oil prices are pushing inflation risks higher, and the Federal Reserve remains the single biggest force shaping global markets. We are entering a period where technology, energy, and monetary policy are colliding in ways that could redefine investing for the next decade. If you want institutional level market insights explained simply, subscribe to Ana Armstrong and explore the future of AI powered investing at Chatime.